We have seen a complete coordinated rate cut policy globally at this time, as central banks are now refusing to admit that the economy is much weaker than what is in plain sight. They present a certain set of statistics, they report in their documents that everything is going reasonably well. Yet when you look deeper and see their actions, it's two completely different pictures. Get ready for the most aggressive monetary policy in history. You came here for the truth, so let me unveil that for you. Today we're going to look at what's going on with the central banks, in particular the Federal Reserve, but I wanted to show you other central banks around the world and what they have been doing. The Federal Reserve is not the leader in this case. Their interest rates are apparently too high. We have seen the calls from everybody, top to bottom, saying the policy is too tight. You need to decrease interest rates. You need to print more money. This is unbelievable because right now, even today, we are at unprecedented levels. We're talking about excessive amounts of money being held at the Federal Reserve. Look at their balance sheet and you can see trillions upon trillions of dollars, plus all the secret money that they lent out during the financial crisis. We don't even know what has happened ever since. Then you go in and look at their interest rates. 2.25 to 2.5 is extremely low historically. There have only been a few cases where it's ever been this low ever, and then you compare that to the rest of the world, and everybody seems to want to go lower, lower, lower. We're seeing this in Europe, we're seeing this in Japan. I'm going to show you a couple examples right now where they've already begun. In a surprise move, South Korea's central bank lowers interest rate for the first time in 3 years. So this is brand new information. We're seeing that from South Korea. We're also seeing South Africa cutting interest rates to shore up a weak economy. All right. Next, we have, as noted back earlier in July, RBA cuts interest rates to new lows of 1% amid slowing economy, prompting the big four banks to respond. If you want to continue to grow these bubbles bigger, you have to reduce interest rates significantly, and that's what you try and actually achieve by getting people to borrow more money, by getting businesses to borrow more money. You make the money free, and if they are able to then put that money to good use, it helps the economy. That's the whole point. However, it starts to actually create these excesses, these imbalances, these problems that will inevitably occur. You're looking at corporate debt as one very good example of the insanity that is going on today. So let's look further into this issue that we're seeing. We have these cycles that repeat over and over again, and we have every single time central bankers who tell us there's nothing to worry about. Then of course you have the mouthpieces of all of these central bankers, the bankers underneath them, the mainstream financial media, and everybody top to bottom telling you they don't have a reason to worry because they are taking care of it. They're going to manage it. We're going to ensure that this prolongs as long as possible. But look at what happened with the irrational exuberance last time around. The excesses built up so dramatically and created a financial crisis that was felt not just in the United States, but all across the world. It was reverberated and was very profound in places where it shouldn't have affected it. But because this financial system is all interconnected at such a deep level, it creates a problem everywhere. This is the New York Federal Reserve Board Recession Indicator, and you could see that it has never been able to make it to this level without eventually ending up in a recession. I want to make that very clear. So while you're seeing the number is 33, while that isn't seemingly very high, look at the previous instances. Essentially, you don't go back from this point. That's sort of the point I really wanted to make here, is that it's not necessarily going to go to 100% and then it's going to end up in a recession. We don't know when that recession is going to happen. We don't know how far this will go, but the point is that it never makes it to this point and it doesn't end in a recession. There are so many people who would deny that it could happen. That's ridiculous. Now, the intensity of which we don't really know. Is it going to be the worst thing ever? Well, that remains to be seen. Only time will tell. The Federal Reserve produces the Beige Book, and you can check this out for yourself. When they produce this, I think it's important to just take a look through, just at least very quickly skim through the document. It is quite long, but at least look at the synopsis right here, overall economic activity. And what you will find basically is that they say we're seeing modest growth, we are seeing modest pace of this or that, and things look generally good. Okay, as it says right here, the outlook generally was positive. Okay, so that's what they tell us. And then we have all the way on the other end of the spectrum, central bankers like Powell, like the Fed Williams, like everybody else saying it's now time to lower interest rates. There is a complete disconnect from the information that they are showing us and the actions that they are about to take. Here we are in July. They say that they're going to actually bring down interest rates here, but I don't understand why. They're talking about this nonsense that, well, we see some potential risks. So what does that have to do with reducing interest rates? It doesn't make sense at all. You are there to act should something happen. That's their mandate, apparently. Well, if there is something that's going to occur, then you can go right away and reduce interest rates. Why are you doing it preemptively? That doesn't make any sense. There would be no case for that at all. Why they're doing this, that's not being told to us. There's something deeper going on. And I do believe that they are looking at certain economic statistics they are unwilling to mention, but of course you won't find that in the Beige Book. July rate cut expectations. It is widely assumed that the Federal Reserve is going to cut at this meeting coming up. However, the rate at which they are going to cut, will it be 25 basis points? Will it be 50 basis points? Well, we can see that 25 basis points has actually reduced, it's come down, and 50 basis points has come up. They are expecting a bigger and bigger chance, a bigger and bigger rate cut. Now, why is this the case? We're getting all this news coming out there that everything is fantastic, that the trade deal is going to happen, they're going to start negotiating again. We're looking at the Federal Reserve ready to respond. We're seeing stock markets at all-time highs right now. We're looking at the jobs are so fantastic. We have seen the unemployment rate is doing oh so well. Last time I checked, I think it was something like 3.7%. Wow. So what in the world is there a need for reducing interest rates? I don't see it at all. If anybody could explain it to me, please do, because it doesn't make sense. The mainstream media is not making sense on this one. This is a chart I've continuously shown you now. We're seeing the disparity in between the 10-year yield and the S&P 500, and we are noting that this divergence has persisted for a little while. This has been going on basically since the beginning of June up until present, and one way or another, these will come together. Now, whether that happens in some sort of devastating action, whether it happens slowly but surely, that will of course remain to be seen. S&P rises on hopes that the Fed will take a more aggressive easing approach. Now, this is funny because we have seen such an aggressive easing approach. I don't understand how you can become more aggressive. We're looking at them keeping rates so low for so long. They have never normalized. It never got even close to normal or neutral, as they like to say. We are not anywhere near that, but this is the topsy-turvy world that we live in. Feds Williams hints at more aggressive rate cuts, quote, better to take preventative measures. The question I have, Mr. Williams, is what exactly are you trying to prevent? All the numbers I just quoted a minute ago are fantastic. All the numbers that you look at, that you present, that the mainstream media presents are in fact doing very well. So what exactly are you trying to do? If you're trying to take preventative measures, bring the rates all the way down to zero. Bring them down into the negative. If that's what you're trying to do, but that's not the case. They have begun a new quantitative easing cycle. As soon as they hit this switch, that's the beginning. They are in fact hinting to people who are paying attention that they are going in the new quantitative easing cycle. It's going to start by reducing interest rates, and who knows how long it's going to take before QE4. Then the New York Fed had to come out and clarify Williams' speech that market took as a signal of a rate cut. And I made a post about this in the community or blog section of my channel, basically suggesting that the market didn't care that the Fed had to come out and clarify this speech, that it went up anyway. That's the way this works. You don't have to worry about anything that comes after. If there's a jobs number that comes out and looks fantastic, and then they revise it and it looks terrible, it's okay because it's already come out. It's old news by now. This is the absolute scam that they pull on people, and they fall for it every day. Nobody ever knows about the revisions that take place. It is absolutely a joke the way that people are brainwashed. The sheep will be slaughtered. The market hopes the Fed will make an even deeper cut to rates later this month. So 25 basis points, that's nothing. We've already priced that in. We want 50 basis points. Hey, why not go for 100 basis points? Why not go all the way to zero and go down below? Because everything is so easy today. There's no risk involved. So why not just do it? That's my question. I actually am asking. I am not asking a rhetorical question. I'm wondering, why in the world wouldn't you just drop interest rates down to zero? If there is no repercussions of it, please let me know, enlighten me. Hedge fund manager who called the housing crisis bets that the Fed will cut rates to nearly zero. This is pretty obvious. I think it's understood right now that the Federal Reserve is going to go down into the ground. And you look at the other central banks around the world, they've actually led the charge, but the Federal Reserve will be the one that everybody is watching. Hedge fund manager Kyle Bass reportedly believes U.S. interest rates are headed for zero next year as the U.S. economy enters a recession. Once an economy falls into the tractor beam of zero rates, it's almost impossible to escape them. And this is what we will have to actually deal with at some point in the near future. We're looking at these central banks, which never were able to get their interest rates back up to a normal level. And so they have less firepower. They got less ammunition to deal with. And that's never a good thing, because in a crisis, you're able to utilize that. But if you got to bring things down into the negative, you are really creating a problem. Look at Europe right now, which is completely ruined permanently. There's no way out of this. There's no way to grow out of that mess. They have a deflationary spiral that is taking place that is pulling the individual down. Forget about the central bank. Forget about the corporations. The individual is being hurt by the policy actions of the central banks. If you found this video informative, hit that thumbs up button. It's just one button. You made it through the video. If you want to support me, just click the like button. Thank you very much. If you want the financial education you were not taught in school, these two books have everything you need. Top to bottom, A to Z, get all the details about the foundation, history, the asset classes, everything you need to know. If you want the audiobook, that's available at themoneygps.com. Hang on a second, don't go anywhere. Have you seen this video before? Well, if you haven't, definitely click on it and I will see you over there.